Hey everyone, thanks for joining us on Tuesday. We have Jonathan Corpina joining us for a nice little Zoom lunch interview. Thanks, Jonathan, for taking your lunch time to chat with me today.
Hey, Olivia, hope all is well.
Well, what news do we have? The New York Stock Exchange is doing a soft open. What do you know about it?
Right. So last week, the NYSE announced that they are going to reopen on March 26th. Clearly, an exciting headline and news item that came out for not only the floor community, but I think in general for everybody, for America. I think the symbolization of the New York Stock Exchange Open is very important. It continues on the same theme that we get out of Washington and then out of New York State, that we are in this reopening process and getting through our phases. The New York Stock Exchange is considered an essential business and operation, so doesn't fall under that same phase guideline that we saw Governor Cuomo outline for us. But clearly, this is something that we've been waiting for and looking forward to. And talking to people within the industry, with outside of the industry, this date has been something that we've been waiting to come, and we're ready to get back down on the floor. So what is it going to look like? From what we know right now, it kind of looks like and sounds like the same guidelines that we've seen in other businesses and industries, right? A limited capacity on the floor. I'm not sure of a percentage basis that they are looking for, but I know that it's clearly significantly scaled down. NYSE staff will be very, very minimal working on the floor. Most of them will be working from home. We will not have the designated market makers on the floor. The DMMs who have been making markets from off the floor electronically will continue to do so. And then from floor broker, capabilities, a firm like Meridian, will be scaled down to about 30% of our regular employees will be on the floor day one. I'm sure will look like that for quite some time. So it's going to be interesting to get back there and exciting to get back there. And we've been working very hard since this announcement was made last week to come up with a plan on how we're going to service all of our clients and customers with the amount of staff that we're going to have on the floor.
Well, we are so excited to see you back on the floor. I know you'll be joining them shortly, and like you said, it'll be baby steps getting in. It's true that the New York Stock Exchange was like the bellwether, I guess, for the slow reopening we're having in the country. A lot of my friends and different businesses, they got their messages that they were going to go back to work after that news came out. So it's really exciting.
It is, and I think people look at it as symbolic, right? I mean, the New York Stock Exchange is an iconic building in our country that people use as a symbol for our finance. So the markets have still been trading without the floor broker liquidity, and it's been documented and studied that without our liquidity, the markets haven't been as efficient. Spreads have gotten wider. Pricing mechanisms have not been as efficient. But from a symbolization point of view, it's showing our country, it's showing the world that we are moving forward and that we are getting back. And I'm looking forward to getting back down there, seeing faces that I haven't seen for 2 months, and then moving this ball down the field, right? We're starting off with limited capacity. I'm sure in a few weeks after that, they're going to expand it a little further. And hopefully the plans that they have in place with the internal processes and their external consultants will get us back to a place of a new normal. What that new normal means, what that looks like, when that comes, we don't know. But let's like you said, baby steps. We're going to take May 26th, the Tuesday after Memorial Day, as our first step. A significant date is going to be that Friday. There's going to be a large MSCI rebalance. So that's going to be interesting to see that type of volume and liquidity come into our markets, running through floor brokers with our limited numbers of brokers on the floor, but we will be prepared for that. And then once we get through that, June we'll use, continue to build and grow and expand our presence. And then at the end of June, we have the Russell rebalance. So hopefully we're going to have more bodies on the floor by then.
Yes, and you'll be seeing a lot more of people, I'm sure, after their COVID-19, if you know what I'm saying. You mentioned there's going to be less DMMs, Jonathan. I mean, now that we're going to have these huge rebalances, what will it be like without them?
Yeah, it's going to be interesting to navigate that, right? But this is what we have, and this is the blueprint, and we've all always on the floor in the floor community have been very innovative to changing rules and changing regulations and changing products, and we've been able to to sustain business models and expand business models throughout all these different environments. So it's going to take us, a day or two to understand how that's going to navigate. But clearly, technology has helped us become much more efficient, and our capacities continue to expand. So we'll have access to information on an electronic basis that we'll be able to relay to our clients as far as imbalances are concerned. Those last minute or two before the end of the day where we're normally running around the floor getting from stock to stock, that will not be happening under this current temporary environment. But we'll still be able to have the tools and mechanisms to get our clients the best price.
And there's been a lot of optimistic things actually coming out of the quarantine. What kind of changes are you excited to see that the New York Stock Exchange might have?
Oh, listen, I think we're going into a new world, and we're going to a new environment, and things will and do look good on paper. But once you start to really implement them and roll up your sleeves and get into that environment, things might change. So, the exchange is going to be very amenable to working with us and getting us, back on the floor and as efficient as possible. But we still have to keep in mind, the social distancing on the floor, wearing masks on the floor. They're going to be cleaning the environment every night, providing hand sanitizers in many different areas. We have to, as a business owner, we have to ensure our employees' safety and well-being. So, we're going to be supplying masks and gloves to our employees and making sure that everyone is educated and comfortable in being in that environment. The NYSE has done a fantastic job getting us to this date, to this May 26th date. I know that they've been wanting to get here sooner than later, and this seems to be the right time. I think the community feels comfortable that the NYSE has put the measures in place to keep us safe, and that's going to continue moving forward. And like I said before, I don't know how long, and I don't think anybody really knows how long the different phases, the different rollouts are going to be. But I do know that the NYSE is going to use every mean possible to make sure that our safety and our well-being is a priority.
And it's really cool that it's going to be around Memorial Day, an American holiday to celebrate. Do you think that the government is trying to get these opening dates close to these holidays for a kind of symbolic reasons?
You know what? I think that's, the symbolism is certainly there. And as we spoke about symbolism of the building and of the New York Stock Exchange, but I do think that, there are a couple of factors that are associated with our dates reopening. There is the numbers are getting better, and the numbers are supporting that our economy and our businesses can reopen on a limited basis and following the right protocols. The state of New York and the U.S. government feels comfortable with certain things occurring. So I think it falls within that. And that, once that is met, and looking at the calendar, as we said, that MSCI rebalance of having brokers back on the floor, being able to handle that volume, that volatility, and that liquidity, I think that also played a factor in the decision. Number one priority was, can we get back open? Can we be safe? And once that criteria was agreed upon and was met, then it turned to, okay, what's a good day to get this done? And this gives us a 4-day ramp up to get to that MSCI. Yes, it is a short week because of the holiday. So I'm assuming Tuesday, Wednesday, Thursday are probably going to be slower days. And I do think that also helps us getting back on the floor and getting our technology up and running, having customers recode their programs and algorithms that have now been sending orders elsewhere, code them back to come back to floor brokers back on the NYSE. So it seems like all the timing, all the planets have kind of lined up to make this work at this time.
And it's nice when that happens. The universe does line up once in a while for us. Last but not least, Jonathan, you mentioned the data is getting better. We did get housing data today that was expectedly lower. What kind of data are you basing your trades around?
Yeah, kind of hard to reach out and grab any of that at this point. You look at the jobs numbers and we know that they're going to be bad. The good news, I think, is that we're becoming, we as a society are becoming much more comfortable with where we are at this point and moving forward and what needs to be done. We're comfortable with the COVID numbers that are getting better, the number of unfortunate deaths that are occurring and hospitalization. And I think from an economy point of view, we do know that there's a light at the end of the tunnel. We just don't know how far it really is at this point. We're waiting for that mechanism to get our economy sparked again and get back in motion. And we do know that things will go back to some sort of normal, in the retail space, in the travel space, financial, across the board. We do know it's going to get somewhere. So looking at economic data and looking at, these earnings that are coming out now, it's kind of hard to use this data as true foresight going forward. I think what we're going to have to do now is kind of tighten that scope much tighter and take a real grassroots approach. See what companies are reopening, see at what capacity that they're, having foot traffic through, seeing, looking at the airlines. You look at these TSA numbers, we hit a low of the 80,000, TSA travelers in a day. We're back up into the 200,000s. That's a gauge that you could start to see. I know for certain in this New York metropolitan area, many people have decided, or many people are looking to, expanding and living outside of New York City. So home numbers are starting to very, very slightly get better in the suburbs outside of New York City, Southern Connecticut, Southern New York, New Jersey, Long Island. Those areas are starting to expand too. So I think we look at the markets, we look at the charts, things are progressively getting better, albeit slow. We're going to have to be very patient to really get some grasping data out there that we can really lock in on.
Wow. So basically rush hour traffic in the suburbs is going to pick up after that by what you're saying.
Yeah. And it's going to be interesting. I've been a train commuter for 20 plus years now, and driving into work next week is going to be a new thing for me. So that's going to be interesting to see how many cars are going to be on the road going in and out of New York City.
Well, good luck with that. And again, thank you for having a lunchtime Zoom with Modern Wall Street. We love having you on the show. We'll see you on the floor next time.
Sounds great. Thanks, Olivia.